Andrew, welcome to The Market is Open.
Thanks for having me there, Josh.
Yeah, so today I think we want to talk about the airline stocks. It's a pretty affected sector from this COVID-19 coronavirus.
Yeah, one of the most affected sectors in the cruise lines as well. But we're going to talk about airlines today.
Yeah, the cruise lines though we're not going to talk about it, but the thing is they don't pay US taxes, so they're pretty much like screwed, right? Like who's going to help out the cruise ships, right? No
I
one.
think didn't Trump say he was going to help them, but who knows if he's actually going to help them?
Yeah, but why would we care if who would help an industry that doesn't pay taxes? So let's just go to the airlines and the biggest of them all, American Airlines.
The biggest in what by not in market cap.
Yeah, not a market cap, and but whatever. They're near the biggest in revenue. If we just toggle up their financials from our website, 44.5 billion of revenue last year. Stock has had quite a hit in the last month. They have one of the biggest amounts of debt of any of these airline companies, and let's just look at their presentation quickly and what they're saying. So, I think we should cycle down here.
Yes, nice of them to make this presentation for us. I think they made it specifically because of the coronavirus.
Okay, so American Airlines domestic is 31 billion out of 42, but doesn't really matter what percent is domestic or not domestic at this point, considering.
Yeah, at this point, I'm not sure it matters so much anymore. I think a lot of airline companies, are cutting back domestic flights as well, especially to those.
Well, what I will say is like it's still better to have domestic, just because international is definitely. People are just like international, to hell with it, right? Like international's gone. So American
They're bringing people back. Everybody's coming back.
Everyone's coming back and no one's traveling. Like there's not many people in the world that are traveling for work or traveling home from Europe to Canada or need to travel home. So American Airlines is pretty exposed with 11 billion of revenue from international markets. They show us like a graph. They say, while load factors have declined, there is still demand for travel. That was on March 8th. We fast forward.
They were already hit pretty big on the Pacific one and a little bit on the Atlantic one. The domestic one seems to be hit just very slightly, actually, not even as much or even more than the Latin America one. Mm-hmm. But I think now, after a couple of days, we've seen this is probably going to be even worse now.
Yeah, but Southwest, so all the airlines are canceling trips. We're going to get through that, but Southwest has not canceled any planes yet, so that's interesting. Okay, so we have...
no, Southwest said that they're going to start slowing down in the U.S., I think.
Did they?
We'll check. But yeah, I'm pretty sure I saw that yesterday. It was trending on Yahoo.
We see that Southwest said the company would monitor demand for additional reductions after a first round of cuts. That's, I think, for employees. But so one of the few U.S. airlines still flying a full schedule, even as spreading coronavirus has sapped demand. And Southwest says it's seriously considering cutting flights. So that's interesting. So that might tell us that demand is not dropping off as much as we think if Southwest is still keeping all their flights on schedule.
And also, even if they cut flights and stuff, doesn't that, I guess, lead to increased prices?
Yeah, exactly, because there would be less supply. So that should...
Every time they add supply, they screws up all their prices. So by cutting back, I think it'll keep the prices at least normal.
This is American Airlines again. So it's unclear what's going to happen. I don't know if they'll shut down domestic travel. That seems like a mistake. It seems better to just test people when they come to the airport, make sure they don't have it, right? Can you test people? Is it an instant test or no?
It is not. As far as I think it takes like 8 to 24 hours to do the instant version. Mm-hmm. And but they should test anybody that lands, and it's probably the planes themselves or the airports that are where people are coming in contact with a ton of other people. Mm-hmm. Yeah, but they should be testing anybody that comes into the country or anybody that lands in the country.
Yeah, so it's unclear what's going to happen domestic. What we can see is American Airlines, their traffic is down. Let's go to the next plane company. This is JetBlue, actually. So JetBlue is saying COVID-19 is having a material impact. They don't really tell us that much. 2020, so they say their guidance is $2.50 to $3, excluding COVID impact. I mean, I don't even know why. That seems embarrassing.
Guidance.
Yeah, you're like, oh, okay, well, you guys are going to earn $3 this year. Okay, so let's just ignore JetBlue. They're obviously not very serious about this, but... Yeah, so let's bring it up.
They can't go bankrupt.
Let's just go back to American quickly, and maybe we'll only do a few plane companies. But okay, so when we look at American's balance sheet, they have 21 billion of long-term debt, right? Then they have operating lease liabilities of 7.4 billion, so that's 28 billion of debt, and then they have short-term debt of 30 billion. So current maturities of long-term leases, so that's a lot of debt. They have 3 billion of debt coming due very soon.
Do you think the government will support the airlines, the American Airlines?
The government may, like, it's more likely than the cruise ships just because they actually pay U.S. taxes, so
Yeah.
they actually do a general good to the economy. And I don't know what would happen if this is prolonged for a company like American Airlines. So if we look at this, okay, so American Airlines has 2.9 billion of maturities just on their long-term debt, and then they have operating lease of 1.7 billion. Okay, so that's 4.5 billion dollars. Then they have cash, short-term investments, whatever they talk about. They have this like $7 billion. Let's see what they talk about. So they have over 7.3 billion of liquidity, more than any airline in the world. I mean, the amount of liquidity isn't that important.
Sure.
It's where it's how big you are relative to your liquidity, right? Like it just says, hey,
Yeah,
we're
that
big.
could make them last another couple days or another couple years, depending on the size of your business.
Yeah. Okay. So then they have 7.3 billion of liquidity, which
Uh,
includes
yeah, 10 billion of unencumbered assets. We said that was like they can sell airplanes or something. Like, what are they going to do to
yeah. They're like, oh,
unlock that value?
yeah. So that's kind of scary. So American is definitely at risk because they have 4.5 billion dollars of just principal payments alone, right? This is not even including like what if they actually lose money, which is very likely in the scenario. I mean, United just said they're going to lose money. So what if American loses 5 billion this year, which is very possible, right?
Yeah, I feel like these airlines have been losing money even on good days.
Well, not anymore. They make a lot of
Not
money.
anymore, but they used to. I feel like they're used to it.
Yeah, they used to, but for the last like 10 years, they've been so profitable. But it's just what happens when your revenues drop on international flights to zero. That's a lot of things you need to move around, and domestic flights, the prices have dropped a lot. Okay, we've done JetBlue, we've done American. Okay, now let's go to Delta.
Okay.
So Delta just says overall capacity reduction in the next few months of 40%, the largest capacity reduction in the history, including 2001. Elimination of flying to continental Europe, parking up to 30 aircraft as I reduce capacity, sure. Reducing capital expenditures by $2 billion. That was from March 13th, so that's basically as recent as possible. They're saying capacity will drop by 40%, but they probably have also, like American, 30% abroad. So that's not so bad, that number 40%, considering they're basically saying domestic is not going to be down that much then.
Yeah. And
So
the other thing that we saw was that the price of oil is down huge, and that's a huge expense for the airlines. And I think American was saying that they can save $3 billion this year off the current price of oil from, I guess, a couple days ago. I think it maybe has kind of stabilized around $33 a barrel.
yeah, it definitely helps them when they lower trips to induce travelers, but it doesn't help them that much. Like you don't save any money on oil when people aren't flying.
Yeah, exactly. But I guess all your expenses from flying also aren't there. So you take away all the revenue and all the expenses from the variable expenses from that flight.
Look how small that is for Delta. It's 420 million of their 40 billion, so it's like almost all variable.
Yeah.
So that's quite good for the airlines that, like obviously they're going to have to store their jets right now, but it's like, hey, all our costs are variable. We just operate airplanes. We don't know how to do anything else. We know how to fly, guys. Like that's it. Okay, so let's go to the next one. So United Airlines, a wholly owned subsidiary of United Airlines Holdings, as a result of demand, announced last week the company has pulled down domestic production by 10% and international flights by 20%. I think it might be a little bit old.
Yeah, they probably have to pull that down a little more.
United has not, it doesn't look like they have a lot of long-term debt coming due. Current maturities of long-term debt only 1.4 billion, much less than American Airlines. And their cash and short-term investment position looks pretty good, and they could probably borrow more. So United Airlines is looking a little safer than American Airlines.
They have advanced ticket sales,
In what, liabilities?
liabilities,
Yeah, I guess maybe that's unearned revenue.
but they're gonna have to return all these tickets possibly.
True, but the people have already paid for it. That's a good point. That could be a drawdown on cash if it's canceled, but probably, airlines don't really, no one ever lets you cancel, or they make you wait on the phone for 4 hours before you get your money back. Usually they say, okay, you have $400. You can use it on a future flight, right?
I don't know. I canceled mine.
And you got your money back.
Not yet, but I'm going to because I have insurance, so they should have to refund me.
Okay, well, we'll see if you get it. I feel like they're going to
Yeah.
tell you have another ticket that you could use.
That would work too, but I think with my insurance, they're gonna have to refund me.
Okay. But anyways, I know for my Air Canada, it's
Yeah, they usually just change the date or something.
yeah, so we'll see with that, but obviously that could be a risk. So Southwest has
They have 100% domestic operations.
so Southwest is pretty much 100% domestic. It says they fly to like Mexico or like Cuba or something like that, but I think that's a
Mhm.
very small proportion. You know, like people go on resort trips and something like that, so they'll fly you into your resort and then, get out of Dodge sort of thing. So Southwest, their announcement's pretty old. They say that revenue, it looked like in March, was going to be down 30% for them. Just they said their RASM to be in the range of down 2% to up 1%. So the company has low leverage and manageable debt and capital spending obligations in 2020. So it says the company has approximately 5.3 billion in cash and short-term investment and a fully available revolving credit facility. So if we pull up Southwest's balance sheet, which look at this amazing cash situation. They have cash 2.5 billion, short-term investments 1.5 billion. They're saying it was 5.3 billion, and then they say have an initial 1 billion of like revolving, so that's 6 billion. And then we look at their costs, and just like the other airlines, this is all variable costs. So hopefully, they could bring that down. And Southwest is, we were talking before, Southwest is saying that they're still one of the few airlines is still flying a full schedule. I feel like, they're not complete idiots. They're probably flying it because it's still somewhat profitable to do it. What do you think?
Mhm. Okay,
So,
yeah.
so they must be taking an advantage because they're a low cost producer, something like that, where they're doing something tricky. Do you know one thing I noticed in September 11th? Southwest stayed profitable after that.
Oh, really?
There was a 40% drop in domestic, and Southwest stayed profitable. They made like operating income every quarter after September 11th, just barely profitable, but they stayed profitable. So Southwest has shown the ability to survive as September 11th, but this is bigger than September 11th. Just to add to that.
Yeah. What about in 2008?
Yeah, 2008, I think they did swimmingly too.
All right.
Like 2008 was probably not much compared to 2001, which was much bigger. So Southwest has a lot of cash, and they don't have any. So American and a lot of these other companies, they have operating leases. So one of the companies that we're not going to talk about, but Spirit Airlines, they have a lot of operating leases coming due in the next year. If you look at Southwest, current maturities on long-term debt, 819 million. Then long-term debt, less current maturities, so that's 1846. But that's long-term. That's only in the next year. So they only have 819 million of debt coming due in the next year, and they have current operating leases. They only have 353 million of operating leases, which is money that you pay for aircrafts that you don't own. So it's very, very small amount. So that's only about 1 billion. So Southwest has very, very nice liquidity. What I'm seeing.
Mm-hmm.
So I think overall, Southwest is by far the best company if you want to play this sector. I do think it will be volatile. It's unclear what domestic airlines is going to be doing in terms of traffic. How much will we be down? But if you need to play the sector, and I personally own Southwest Airlines, I owned it before this crash had come, and then it had dropped too quickly for me to get out. Though I did liquidate half my position at 39 and bought PNC Bank at 98 just to reduce a bit of my airline exposure. But at the same time, if I had to pick an airline, I'm quite happy to be in Southwest.
That's pretty good. Is that a good ending?
Yeah, that was the ending. Yeah.
That was pretty good.
Okay, I'll stop recording.